Have you ever wondered what separates the sideline sitters from the market winners? What if I told you that with the right information and a little bit of courage, you could position your portfolio for a life-changing run in 2025? These are companies that are at the forefront of innovation and industry leadership. We're talking about a leader in e-commerce and cloud computing, a pioneer in life-changing medicines, a giant redefining the future of technology and human health. If you only watch one video today, make sure you watch this one all the way till the end. Before we pull back the curtain on these two titans, I need you to do your part. Hit the like button. Let's get 1,000 likes on this one. Share this video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Now let's get to it. Two companies, two powerful stories, one clear goal: growth with purpose. Growth with. Our first titan is none other than Amazon. Ticker symbol AMZN. Amazon is so much more than just an online store. It's a three-headed monster of growth. First, you have the e-commerce empire, a finely tuned logistics network integrating robotics and AI. Then the crown jewel, Amazon Web Services, or AWS, the engine of the internet, a media powerhouse with Prime Video, smart home leadership with Alexa and Ring, now aggressively pushing into artificial intelligence and robotics. It's a stock that has already made fortunes for early investors, but its story is far from over. Optionality in this stock is off the charts, an ecosystem nearly impossible to replicate. The convenience of Prime, the power of AWS, ever-expanding reach into new markets, a competitive moat that widens every day. The next wave of growth is just beginning. You want to be on board for the ride. As of today, August 31st, 2025, Amazon is trading at around $229 per share, but don't let that sticker price fool you. The company pulled in a staggering $670 billion over the last 12 months. Net income for the past year was over $70 billion, with EPS around 6.56. Earnings grew by 94.73% in 2024 compared to the previous year. The consensus price target is hovering around $262, suggesting about a 14% upside. Analysts project revenue from roughly $710 billion in 2025 to over $1.15 trillion by 2030. Net income could near $100 billion by the end of the decade. AI, robotics, and AWS expansion are real profit catalysts, not just buzzwords. Out of 45 analysts covering the stock, the verdict is a resounding strong buy. While the market shows fear, that's often the best time to buy a world-class company. When others are fearful, you should be greedy. Amazon is a fortress, primed for its next major leg up. Amazon commands a market cap of $2.44 trillion and is delivering earnings of $6.70 per share at a price-to-earnings ratio of 34.18. For 2024, revenue reached $637.96 billion with net income of $59.25 billion, evidence of the company's operating leverage across e-commerce, AWS, advertising, and an expanding streaming footprint. Analysts remain upbeat, with many setting a price target of $260.89, roughly 40% above current levels, and Morgan Stanley reiterating its overweight rating. Momentum in media is building too. NBC Universal's ad-free Peacock is set to be integrated into Prime Video channels, a move that could draw more subscribers and deepen engagement. Beyond media, Amazon's advertising business continues to post strong growth, and the company is leaning hard into artificial intelligence to strengthen its competitive edge, particularly in cloud services. That said, global economic uncertainty and regulatory pressure remain watch items, with recession risks and tariff debates keeping some investors cautious. Net-net, Amazon is executing into a favorable backdrop with constructive analyst sentiment and clear catalysts in streaming and AI, while investors should stay mindful of macro and policy headwinds that could influence performance. No investment is without risk. Let's talk headwinds for a giant like Amazon. First and foremost, regulatory scrutiny, antitrust concerns around the globe. Labor practices are another persistent overhang. Competition is fierce. E-commerce rivals and cloud competitors are always circling. Any misstep could be costly. A global economic downturn could slow consumer spending and IT budgets. That would ripple across their e-commerce and cloud segments. However, the potential rewards, scale, diversification, relentless innovation, far outweigh these risks in my view. A slowdown in one area can be offset by strength in another. This company plays the long game. The next company on my list is Vertex Pharmaceuticals, ticker symbol VRTX, a company that is truly changing the world for the better while delivering incredible returns for shareholders. Undisputed leaders in treating cystic fibrosis, a devastating genetic disease. Their therapies, like 𝗗𝗏𝗏, have transformed CF from a fatal childhood illness into a manageable chronic condition for many. Vertex generates billions in high-margin revenue from its CF franchise and has built a fortress-like balance sheet. That cash funds a disciplined pipeline expansion into other serious diseases. This isn't a one-trick pony. They have multiple shots on goal beyond CF. Based in Boston, Vertex attracts top scientific talent and has a culture of relentless innovation. Vertex Pharmaceuticals stands at a market cap of $100.37 billion, with earnings per share of $14.14 and a price-to-earnings ratio of 27.65. The company generated $11.02 billion in revenue in 2024 and reported net income of negative $535.6 million, setting the stage for a year defined by both breakthroughs and challenges. In the second quarter of 2025, Vertex beat expectations with earnings of $4.52 per share versus a $4.24 consensus, a notable swing from a loss of $12.83 per share in the same quarter a year earlier, and revenue also topped forecasts, supporting a more constructive tone from investors. Product momentum remains anchored by 𝗗𝗏𝗏, which helped lift first-quarter product sales to $2.54 billion, while upcoming launches like ALYFTREK and VX828 continue to draw attention as potential growth drivers. Still, volatility is part of the story. Shares moved lower after the pain drug VX993 missed study goals, and a dispute involving Maze Therapeutics, now referred by the National Advertising Division to the appropriate authorities, adds a layer of regulatory uncertainty. Taken together, Vertex is navigating a complex but opportunity-rich landscape. Solid quarterly execution and strong product sales balanced against trial setbacks and regulatory overhangs, with the path forward hinging on pipeline milestones and outcomes in the quarters ahead. When you invest in VRTX, you are investing in a company with a proven ability to conquer complex diseases and a pipeline that could create the next blockbusters. A great biotech company is defined by its pipeline, and Vertex's is loaded with potential game changers. The most significant near-term opportunity is sickle cell disease and beta thalassemia. Their gene-editing therapy developed with CRISPR Therapeutics has already shown promise in regulatory progress. This is cutting-edge science with multi-billion-dollar market potential. Vertex is making major inroads in non-opioid acute pain, a potential blockbuster if successful. If successful, this could be one of the biggest drug launches in history. Drug development risks, clinical failures, and regulatory hurdles are real. But Vertex mitigates risk with a profitable CF-based funding diversified R&D. Wall Street is bullish because they see a disciplined, strategic drug developer with a clear path to sustained growth. So there you have it. Two absolute titans. Amazon, the undisputed king of e-commerce and cloud, and Vertex Pharmaceuticals, curing diseases and building a pipeline for the future. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and join today. Trust me, your future self will thank you. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. If you had to invest $10,000 in just one of these stocks for the next 5 years, which one would you choose and why? Drop your answer in the comments below. I read every single one. Like this video, comment with your pick, share it with a friend, and subscribe for more money-making ideas. I read every single one. Let's go make some money.